If you're wondering what you should do in this uncertain crypto decline, then you are in the right place. The crypto market is seeing one of the harshest falls it ever went through before, and investors need clarification about what they should do right now. The smart money, like Big Short investor Michael Burry, have abandoned the market altogether, declaring an impending mother of all crashes. Are you thinking the same? Are you also concerned about what would happen to the cryptocurrencies you are holding right now? Don't worry, we are going to tell you exactly what you should do to avoid any brutal losses. In today's video, we're going to go over the recent state of the most volatile asset class in the world. We will look at what has brought the decline, why everyone is so doomish, and why this gloomy disposition is actually the exact opposite of how you should be feeling. The crypto market, contrary to the conventional, is becoming increasingly more attractive, so be sure to watch to the end to understand exactly why that is. It all started with the Bitcoin crash in 2021. It was the time when things were put upside down, and all investors were near breaking point. The whole crypto industry crashed as Bitcoin's value dropped suddenly from $65,000, its high in November 2021, to $35,000 and even lower. But why did this happen in the first place? Well, it takes us to China, where the crackdown on crypto mining decreased the overall Bitcoin price. Also, Elon Musk announced Tesla would no longer be accepting Bitcoin, which added fuel to the fire. Bitcoin wasn't the only one to pay the price. Some massive crashes were about to happen. The biggest one was the Luna crash, where $60 billion of the investors' money was wiped out. Earlier, it was believed that since Luna is a stablecoin, it cannot crash, but that wasn't the case. Luna is an algorithm stablecoin, which is different since it doesn't have actual USD or assets stored in banks. Luna was designed to protect UST from price fluctuations, but it simply couldn't stand up to continual selling pressure from panicked investors. It became a classic bank run. Unable to weather bear market conditions, its eventual collapse was inevitable. But wait, it gets better. It wasn't just Terra Luna who sent the crypto market into tailspin. Back in October 2021, Celsius was one of the biggest crypto lending platforms, holding $25 billion worth of blockchain assets. It had capital worth $3 billion from companies like Westcap and CDPQ. Despite the recent decline in Bitcoin values, the lender was still managing around $11.8 billion in assets as recently as May. With an additional $8 billion in customer loans, Celsius was among the largest in the world when it comes to crypto lending. Yet that all changed within the blink of an eye. Today, Celsius has reduced its available cash reserves to $167 million, which it claims will offer ample liquidity to continue operations throughout its recently declared bankruptcy. The demise of Celsius is the third major bankruptcy in the cryptocurrency ecosystem in the past few months, and its demise is being heralded as crypto's Lehman Brothers moment, with some comparing the collapse of this major cryptocurrency lender to the 2008 financial crisis that was presaged by the failure of a major Wall Street bank. What about the leader of the pack itself, Bitcoin? It seems we all need to reevaluate the prevailing Bitcoin thesis of a hedge against inflation. The explanation of the orange coin's value simply no longer holds water. Bitcoin's value has dropped by 60% over the last year, alongside the first big inflation wave since the 1970s. The argument that Bitcoin is digital gold has also been roundly disproven. Gold's 6% decline this year has been much less than Bitcoin, equities, or even bonds. One should not draw the conclusion that Bitcoin's problems prove the whole sector is doomed to failure. Even if the likes of BTC, Terra Luna, Celsius, and untold other crypto enterprises have seen better days, the future of the cryptocurrency sector still has a lot to offer. In fact, the second largest blockchain, Ethereum, has just undergone a big update that has the potential to revive the cryptocurrency market. Companies supporting innovative blockchains continue to work toward launching novel payments, investing opportunities, and financial product infrastructures. And despite the continued skittishness of retail investors, institutional investors are only increasing their holdings in the cryptocurrency and blockchain industries. For example, Sam Bankman-Fried acquired a 30% ownership in Skybridge Capital, an alternative investing business. In turn, Skybridge will deploy a part of the investment funds to buy $40 million worth of cryptocurrencies for its own balance sheet. Mitch Machigian, a partner at Blockchain Coinvestors, points out that the crypto winter has not dampened institutional interest in blockchain innovations. He argues that there is no institutional bear market in cryptocurrencies. Large corporations and financial institutions continue to pour significant resources into blockchain projects, and many of these institutions have only gotten more excited for platforms like Ethereum since the merge. Another fundamentally positive development for the entire asset class is increased oversight and investor protection. In September, the Biden administration unveiled its initial blueprint for the future of crypto and digital asset regulation in the United States. These new orders could serve as guidelines for regulators, such as the Securities and Exchange Commission and the Commodity Futures Trading Commission, as they look to implement official rules to protect investors and reduce illegal activity in the cryptocurrency space. The White House information sheet states that by the first half of 2023, the U.S. Treasury will have completed an illicit financing risk assessment on DeFi and NFTs. This might sound like an unwanted intrusion from federal governments, but it's a signal to high net worth individuals and institutions that crypto is becoming safe enough to devote some of their money to it. Alright, so the crypto market might rebound back to the stratosphere and the sun will shine once again on the degens of the world. But how should you approach investing in crypto today without getting slaughtered in another downturn? Or the better question should be, what should you do to stay safe no matter what happens in the crypto market? We are talking about the crypto market, which is highly volatile. The price can fluctuate more harshly than we expect. Hence, the best plan is to buy and hold. But why should you do so? The simple answer is that in the long term, the crypto price will increase. If you take the Bitcoin graph and see the price 5 years ago, you will find the price was low. Now, if you had bought 5 years ago and sold it today, you would have earned a massive profit. However, if you bought a month ago and sold today, chances are you won't pocket a massive profit. Even sometimes, you have to face losses. Also, you can go with cost averaging. In this strategy, you buy cryptocurrencies in phases instead of buying them all at the same time. In that way, the crypto price decline will be beneficial since it will help you decrease the average price you bought the cryptocurrencies. If you're worried about taking a loss, even if only on paper, limit Bitcoin holdings to no more than 5% of your total assets. Once you've done that, you should be able to relax, knowing that ups and downs are harmless to your portfolio as you haven't got your everything invested in the crypto market. If you've done that, then don't stress about the swings, because they're going to keep happening. If you're too scared to go back in the game, maybe you're allocating too large a percentage of your capital. Are you thinking of investing in the crypto market by taking loans? Well, there are some who want to play that deadly game. The crypto market is a place where you don't know what will happen. It's volatile. Thus, gambling with debt money can be deadly. If you have saved some money and don't want to lose it, don't invest in the crypto market. No cryptocurrency promises 100% returns, and there is always a risk involved. Do you know why most investors lose everything? It's because they make decisions when they're nervous and everything is crumbling. Never do something like that. If the market crash has caused you to reevaluate your crypto holdings, it is still not a good idea to make any drastic changes to your portfolio right now. Contemplate what you feel most secure about moving ahead, whether that's decreasing your future crypto allocation or diversifying your holdings via stocks or an index fund tied to blockchain technology. And once you commit to a strategy, avoid looking into it. Honestly, it's the most foolproof approach there is. Set it and forget it. Be prepared for more price drops even if you decide to buy now when prices are already low. Again, only invest what you can afford to lose, and only after meeting your other financial obligations, such as those for retirement and emergencies. Naturally, you're probably worried that the market could drop further and you don't want to be the first to stick your neck out. Maybe this last piece of optimism will make you feel better. The great inventor and business owner Elon Musk thinks the US markets are headed into a recession. But Musk has remarked, "It's probably not the end of the world, but rather a natural market cycle downturn. But I would guess it's going to be a mild recession for, 18 months or something like that." These cyclical downturns are really a feature in markets, not a bug, because, as Warren Buffett famously put it, when the tide goes out, we all find out who is swimming naked. Over-leveraged companies like Celsius or fundamentally unsound enterprises like Terra Luna get washed out of the global economic system, clearing the way for more coherent, productive projects. Taking a loss can be very discouraging, but if you allocate your capital with prudence and patience, you can tell your grandkids how you made your family fortune by investing in meme coins when the rest of the world was hiding in the Federal Reserve's monopoly money. What's your take on the crypto market? Am I horribly over-optimistic? Or do you agree that now could be a great time to start dipping your toes into an ocean of Doge coins? Please leave any thoughts or opinions down below in the comments. They always produce an interesting conversation. So, subscribe to Ape Finance, and we will see you in the next video.